Hello traders, Nick Shane here looking at Google stock, Alphabet. I usually look at GOOGL, the ticker. So recently reported earnings, market liked it, then faded it, probably not due to Google itself. So it's a back and forth. This is a 2-hour chart. If you want to look at the daily chart that most everybody looks at, this is about a year's worth of data. If we take out the drawings to simplify it. Ascending trend, higher lows, higher highs, and now stalling a little bit or consolidating. There's a little cluster. It did it here. It's not a problem. So is it, what's it worth? Well, what's it worth is different to people, from person to person. It depends on the time frame. If I'm trading it short term, really value doesn't really matter. The charts matter more. It's about a 29, let's call it 30 PE, price to earnings ratio. This is trailing 12 months, so it's actual price to earnings. It's about 6 times sales, just over that. So a little less expensive than Facebook if you consider the times sales, but Facebook has a better prospect in my opinion as far as growth. So Google is trying to do the right things, but they haven't done much. All they've done is split the company because they were afraid of Wall Street when Google was doing all kinds of crazy stuff. I loved it. They were doing the glasses, they were doing the robots, they were doing the self-driving. They still are, but they spun it off. And then they got scared because everybody was saying, well, you got this pile of stuff that we don't know what you're doing with, and you call it other projects. So it scared people, and now for years they've been tailoring to the opinions rather than to the growth of the company. Amazon doesn't give a crap about what people think about it. They spend money wherever they think they're going to make money. So that's the attitude versus the Google, duck your head, kind of a cowardly attitude. New management, kind of a shake-up in the C-suite, so maybe going forward it's going to be better. I love the company. I'm all about Google. I'm entrenched in Google and Microsoft products, so it's not like I hate it. And I like the stock on dips. I sell puts to profit from it. The point is, valuation is different from person to person. Short term, it's more of a trading vehicle. Longer term, it's an investment. So here's what I say. Longer term, if the markets are higher, Google should be higher. My only worry is Facebook. Its marketing is phenomenal. And how long before all of the pay-per-click ads move to a Facebook model? Amazon is also there. So Google need to do something. They dominate still, but for how long? All right, so in order to tell a little bit more about it, I probably need to zoom in a little bit. So back to the 2-hour, maybe even an hour candle. So I had the conversation today in the chat room. By the way, before I forget, down below in the description there'll be a link to the chat room if you want to try it out for free. Also, don't forget to subscribe to the channel on YouTube. That's free all the time for now. So it has had the earnings pop. It was phenomenal, but it was also phenomenally rallying into the earnings. So the fact that it didn't breach that is notable, but not a deal breaker. What is, on a rally like this, I don't usually like to buy the stock if I'm not long, because as soon as it hits 1486-ish, which is the last failure point from the pop on earnings, there's probably going to be some sellers there. Maybe they'll fade a little bit and then attack it again. Once they take it out again, they get more courageous. So there are a lot of momentum buyers that like to buy high and sell higher. People who invest don't like this, but this is the attitude of a momentum trader. But the problem here is, as soon as they buy high, they start looking at this failure point. So you have 2 failure points that are resistance level, in my opinion. So the zone is somewhat resistive. If they get to here, somebody who bought it at all-time high and then saw this dip and now they're scared to heck. So next time they get whole, they might bail. Shake them out and remount the effort and see if you can make it without them. Does that make sense? So usually when a stock comes back to a prior failure point, they don't just blast through it. They want to breathe about it, think about it and breathe. So if anything, Google might do this. If they do try and fail, they'll probably fail back to here, shake them off, come back to here, attempt it, and then break through. Something like that. Then it starts looking like a cup and handle, inverse head and shoulders, whatever they call it. So I don't want to leave these lines here. Maybe I'll leave them, see what happens. All right, so this fail might repeat at this level here. So I went through that level, but I could have done more zigzags about it. So what's the upside? I mean, the downside scenario. This is proven support for this period of time. This is a short period of time, just days, couple weeks, or actually the whole year, January and change. So I assume it's support, but what if it's not support? Then Google is going to come back and revisit the prior neckline. So if I were to put a stop loss on a midterm trade, probably will be between 1433 and 1422. Whereas, okay, I raise the white flag. If it falls into that, I don't raise the flag until I lose that. So it depends on personal preferences where people draw the line. Some people don't want any red. If it doesn't go their way right away, they're out. Some people put a dollar amount. If my trade loses 15%, I'm out, regardless of where it's at. All valid as long as somebody sticks to what it is. I think if it dips, they'll find buyers at 1450. It's a moving target, 51.52. That's my opinion. It's a moving target, meaning it changes with the move with the price action. But if they lose the footing here, then it starts looking like a head and shoulders. Don't worry about the nomenclature. This is a neckline. I could do this. If you look at it, it's a point of contention. They bumped into it, broke above it, tested it as footing, tested it as footing, tested it as footing. They're going to test it again. If they lose it, that means the buyers, the bulls are tired. The sellers will overwhelm them. And where do they go? They go to the other line like this one. And at glance, that would be that one right there. That's why I put it here. These are not predictions. These are two scenarios. So if somebody says, is it a good value here? I don't know. What's your time frame? Are you trading? Then if I'm trading, I wait for the breach of this or the breach of that. Meanwhile, there's nothing to be done. If I'm holding the stock, I hold it. If it goes above here, I'm happy. If it falls below here, I'm out. If I'm looking to buy the stock, I'll buy it near here. I don't buy it up here because it's into resistance. If I wanted to sell puts in the stock or go long it via the options, I wait for a dip towards this level and I know that there should be support. Then I'll sell the puts with a stop point. So this is how I answer the question. What's the value? Is it a good value? Is it a good buy? It all depends on the time frame. All depends on my portfolio. If I'm long a whole bunch of triple Qs, NASDAQ stuff, Facebook and all of that, then I don't add Google because that's just putting a lot of things in one basket. Moreover, I have to look over the whole portfolio. What does my portfolio look like? Do I have hedges? Am I long bonds? Am I long gold? Am I long fear? It all ties in. Like I was short the financials and I wanted to add to it. Then I decided not to because I was also long bonds in a complicated way in a winning trade. So I didn't want to complicate matters. So I have to look at everything. And in this case, I would have to look at the S&P. So this is the S&P 500, the futures contract. Think SPX-ish, the index SPX. So this is a short-term 1 hour chart. But if I go to, I'm going to erase all the lines, make them disappear. This is all-time highs. Where's the rush to go long stocks at all-time highs? There's no rush in my opinion. We could take that out and run to, 15% on a month. I'm not calling for it, but it could happen because there is no fear, even though the VIX is high. But where's the rush for me to enter at all-time highs? Another anomaly that I see is we set all-time highs this week in the NASDAQ when the VIX was at 16. So this is 16 on the VIX. The VIX is the fear, quote, fear gauge. That's not low. Usually when we hit highs, the VIX is down here. So I looked at prior history and eyeball. I don't have a data bank for it. I'm sure somebody keeps track of it, but you can do it yourself. Pull up a history of the SPX and see if you can see where the VIX was. I'm going to go monthly chart. So each candle is 1 month. And let me see if I can bring in the VIX and see if we can eyeball. I mean, this is not an alert signal to like panic out of anything, but this, I believe, 2007, this was an all-time high. Barely. And the VIX was in the 16-ish, 18, 15. So VIX was high, and the markets were at all-time highs. And that was 2007. So then the markets did this. I'm not saying that's what's going to happen. Then the VIX spikes, right? So we set another all-time high here, but the VIX was down here. So when we went to all-time highs, the VIX went down to 12, 13. Anyway, somebody needs to download the data and do all kinds of slicing and dicing on it. But you know, there's so much in the air. The point is, why am I rushing into a long stock trade with conviction? So at worst, if I'm deciding to buy 100 shares of whatever, Google in this case, I would buy a quarter of it just to get the itch out. And then if it falls, I may add another quarter. You know, you hear that on TV all the time. It makes sense, though. It doesn't take a genius to figure it out. So this is Google. I love it more around $1,410 a share. If they dip a little bit, I would really love it at a big pivot, which is $1,300. Probably not going to happen without a market correction, but it's not that far away. I mean, it's just days away. Like it just happened a few days ago. Like what I mean, in December it was there. So it's not like that was years ago. This is my thought on Google. Love the company. Valuation okay for a growth company. 30 PE is high, but not if they're delivering growth. And so I don't want to deny them that, but I'm not rushing to buy it up here. I'm leery about the whole makeup. The virus, you know, doesn't affect Google itself because it's online and it's not in China officially, but they do have a presence there somehow. But the impact of the virus is, I think, a lot bigger than people are telling us. You know, they raised the alarm and halted a whole country, China, billions of people. Let's call them hundreds of millions of people. Cities in the 12 million, 11 million, those are big cities. So they halted it with just a few deaths. I thought that was strange, but I think the issue there is bigger. That's why the alarm was louder. And the fact that the country has been closed effectively for almost a month is going to have a tremendous impact on its growth. So China has been the beacon of growth for the whole world for a long time. And I remember when the world freaked out when they said, oh my God, it's going to be only 6% growth. The US is like 2%, and it's a champion. So 6% is really what drives the world, to feed the growth in the whole world. And now I read last week or 2 weeks ago that they met print in the 5.5, and that was before the impact of the virus. If, God forbid, they start talking 4s, I think the market will have an issue with that, because you go from 6 to 4 and change, and that's a deal breaker. So, or a game changer for a little bit, at least in attitude. So sentiment matters. And I see no rush to enter up here. So this is where I added a little bit of spin of fundamentals and opinions. Usually I just do the charts. I did the charts and then I shared my opinion. So your opinion may vary. If so, let me know. If you don't like it, or if you like it, tell me in the comment. And feel free to share this video. Nick out.